What is up, guys? The crypto market had a bit of a pullback. Bitcoin is back at 23,000. So in this video, it's actually going to be a bit of a longer one where I want to walk you through not only Bitcoin, but also the stock market, the dollar index, and look at the bigger picture of what I think could be happening here and what levels I'm watching for what could lie ahead. So, make sure you have some time to watch this. Grab yourself a coffee or your favorite beverage, and we are going to dive straight into this. As always, I really appreciate your support. If you can leave a like on this video, if you do enjoy the content, leave a comment down below. It does help it get out to more people. And if you are new and you still have not subscribed, click the subscribe button down below so that you do get those future updates. All right, so let's start out with the weekly Bitcoin chart. And as you can see over here, we are back at 23,000, and completely as expected, we have gotten that initial resistance and that rejection at that 25K. I made a video about this, I think 1 or 2 videos ago, where basically we wicked just ever so slightly above the August high over here, and it's just a big resistance here, which is to be expected. It is the 200-week moving average, it is the 50-week moving average, and the August high over here, and we had such a big run without any real pullback, so it is expected that we don't break through this right away. Now, the good news is still, and let me start out by saying this, is that as long as we are above the 3-day 50 moving average, let's go back to this, let me show you. The 3-day 50 moving average for me is basically the line in the sand for the bearish and bullish trend, which means we are still well above it, because as you can see, it's currently about 19 points, maybe 19.4-ish. So even if we were to get a pullback to 20,000 or even 19,000 on a wick, as long as the price stays above this 3-day 50 moving average, the higher time frame trend is still bullish, and a shorter term pullback could actually be a healthy thing, because when things go up too far too fast, it actually makes it more difficult to continue that bullish trend if there's not enough momentum, and it risks continuing down or breaking back down. Whereas if we get a nice pullback or consolidation, maybe even for a few weeks, we hang around here, we drop back, and we test 21 or 20,000, or maybe a little bit below 20,000, then that could be a more healthy thing. As you can see over here, the similar thing happened here. Back after the March 2020 crash, we reclaimed the 3-day 50 moving average, and you can see it didn't take off right away. In fact, once we got above here, that was April 2020, we only really started taking off in September. And even though it did grind higher, you can see it had this move up and then a pullback and a retest of this 3-day 50 moving average. So we kind of shot through that 50 moving average, and it's very possible that we hang around here for a few weeks, maybe even retest it. And then if that holds, that is obviously going to be the key for the bulls. We need to hold this 3-day 50 moving average. If it does, retest is completely fine, and then we could be looking at potentially further upside. I wanted to share this first so that in the event that Bitcoin does drop to 20 or 19,000 in the next week or 2 or 3 weeks, that it is still completely within the bullish trend, and we just have to look that that 3-day 50 moving average holds. Now look, one very useful thing that I've explained on this channel quite a few times, I will link to that original video up here and in the description down below, is that basically there is a inverse correlation between the dollar index, the DXY, and crypto and stock markets. When the dollar index moves down, crypto and stocks tend to move higher. And when the dollar index moves up, then stocks and crypto tend to have bearish trends. And you can go back and look at how that works. So you can see over here, going all the way back to 2016, when the dollar index trends down, we have our entire 2017 bull market. When it was trending down here, we had our 2020, 2021 bull market. The inverse is true when it was trending up. This was our 2018, 2019 bear market. And this was our 2022 bear market when it was trending to the upside. So once it started trending down, as you can see here, towards the end of last year, and especially once it started picking up some steam over here, once it broke below this 3-day 50 moving average, we started seeing a bit of relief in stocks and the crypto markets. But now, the last week or two, you can see that the dollar index has been rebounding. And is that a coincidence that in the last week or two, after Bitcoin hit the 25.2K, that it has been pulling back and it has been struggling to advance? Stock markets too, as you'll see in a second when we look at those charts, they have also been pulling back a bit as the dollar index rises. So there is a very strong inverse correlation, and an easy way to keep keep an eye on, or an understanding of the direction of stock markets and crypto, is to simply look at the dollar index. When that is trending up, it is more likely that crypto and stocks are going to be trending down, and vice versa. So keep an eye on that. Now, before we move on, and let me share with you potentially what could be happening here with the dollar index, is that we had this whole advance pretty much through the whole of 2022, and we have finally broken market structure, which means we've basically made lower lows. Every time you can see these lows kept on making higher lows, higher lows, higher lows. Eventually we got the market structure break, so it basically made a lower low. Now we're getting a rebound. So what is possible is that we get a rebound as high as the Fibonacci golden pocket, which would be around the 109 to 110 level, meaning that if that continues, you can see we're currently at 105 for the DXY. If it does go higher to 109 or 110, then it is very likely we see more pullback in the short term in the crypto markets and in the stock markets. And that could potentially have Bitcoin see deeper pullback towards 20K, maybe even 19K, if the dollar index continues to push higher. Now, what we're looking for is a failure. So this is just a bounce here temporarily. You can see this little wick over here. It just went below this low. So that is a nice little liquidity grab over here. And now it is on the way up. Once this exhausts, whether it be around here or whether it goes up to the Fibonacci golden pocket and it reverses back down again, we can expect crypto and stocks to continue going higher. So keep an eye on the dollar index. Once it finishes its bounce and resumes going lower, assuming that it does, then we're looking for a continuation in Bitcoin, crypto, and the stock markets. Okay, so there's a few ways to look at Bitcoin right now. One of them that I'm watching is potentially this, where we do have this range over here, where we have these lows over here, and we have these equal highs over here. And I do think, based on the rules of these ranges, is that both sides of this range will get taken out at some point. Now the question is going to be, do we perhaps bounce here, take out the high first and go lower then, which is probably more bearish, or do we continue over here? We can trade around here in the middle a bit, drop down, take out these lows over here, which is around about, you can see that $20,000 level. There's the CME gap at 20,000, and you can see this would take us to about a retest of the 3-day 50 moving average. It would sweep these lows. It would probably cause a lot of people to think we are bearish and dropping all the way back down. Then if it can bounce, get back into the range, target and continuation higher above 25K, maybe to 28 or 32,000, potentially in March, maybe even April. And I actually do think that this is a likely potential scenario over here. As you can see, what I have here is I have the EMA, so not the SMA, it's very similar though, but the 200 in red and the 50 in blue. And you can see the 200 EMA has held the entire move up a couple wicks below it, but basically the whole year, the entire move up from 16K to 25K has been above here. So we are approaching this point here once again of the 200 EMA on the 4-hour chart. If we break below that, it is likely that the shorter term trend has now flipped to bearish, like I'm showing here, and that we are looking to at least probably take out these lows and quite likely these lows, and then this may end up being the range, which I think these lows would be nice to be taken out. The CME gap at 20K, if we can fill that, if we can get back here, I do think this will get taken out too, because it's pretty much a double top, which those equal highs like to get taken out too. So this is something that I'm looking for, whether we get a bit of a bounce here or not. Like I just showed you, the DXY looks like it potentially wants higher. So if the dollar index continues to 109 or 110 in the next 1 to 2 weeks, then I could see Bitcoin and the stock market continuing a bit lower. We'll look at some of the stock charts in a second, and then I could potentially see this scenario playing out. So if we do see this scenario play out, what I would be looking for is, after a sweep of these lows, right, if it gets back into this range, so it goes below it, maybe it spends a bit of time below it, proper candle closes below it, 4-hourly candle closes, and if it gets back in there, then the strategy that I want to look for is I want to look for a long after the sweep, after the deviation, a reclaim of that range, then I would be looking to put my stop at the wick or the deviation low after it's done. Keep in mind, we're not trying to catch a knife. We're not trying to blindly long it below this range. We need it to get back into the range. And then what we are targeting is the top of the range and potentially higher, targeting those equal highs. And you can see, even just doing it like this is a fairly wide stop. As you can see, if you'd enter at 20.3, stop at 19.3, and the target would be about 25, 25.3 maybe even. And that is a 1 to 5 risk reward, which would be a very nice trade that you could even potentially take with spot. You could also take it with leverage trade, obviously, if you know what you're doing. And this is potentially the setup that I'm looking for. It will take some time to play out. If we're looking at this before it gets down there, we're probably looking at 1 to 2 weeks if it goes like this, and then before it gets back up there, maybe another 3 to 4 weeks. So this would be a longer term swing trade, but one that I am potentially watching. And as things unfold, if this scenario is looking more and more likely, I will update you here on the channel, obviously with that update. So also, if you do want to trade, I use BYBIT for crypto spot trading and futures trading. Link in the description down below gets you the maximum deposit bonus. So if you don't have an account there and you want to start trading, use my link in the description down below and you will get those maximum bonuses. And before we move on to the stock market chart, we are watching this. So this is just a potential scenario. If this breaks, you can also see this is very much in confluence with the golden pocket, the Fibonacci retracement from low to high. So if it does bounce here, we'll have to keep an eye out there, but it does need to get significantly higher for us to consider a long. I would not like to trade here in the middle of this range. I would like to either look for shorts above the range or longs below the range. In the middle, trading here, obviously it depends on what time frame you're looking at, but trading here in the middle, it is just chop, as you can see, and it's probably going to chop you up if you trade with leverage. So it's better to be patient, wait for a better setup, like for example this, or higher, and then simply take higher probability trades. Okay, so let's take a look at the S&P 500, the SPX chart, and the Dow Jones Industrial. Because it's nice, also the week is closed, which means the weekly candle has already closed because stock markets are closed on weekends, unlike crypto. So what we have here, the weekly chart of the SPX and the 50 simple moving average and the 200 simple moving average in red. And what you can see over here is that we had this nice move, this breakout above the 50, which was bullish, but now we closed back below it. So it is possible that this little move above here was a fake out, and that is not so nice to see because it could imply further downside, and how much I'll tell you in a second. But what is also important to note here is that, again, this is very much correlating inversely with the dollar index. As the dollar index started pushing higher, you can see the stock market started pulling back a bit, and Bitcoin and crypto started pulling back a bit. So ultimately, keep an eye on that dollar index chart because it is very helpful for the higher time frame direction of Bitcoin and crypto and the stock market. Okay, so if the dollar index continues to push higher, like I showed you earlier in this video, then it is likely that Bitcoin could continue to drop, crypto could continue to drop, but also the stock markets. And this chart is hinting at that same kind of setup, because you can see over here we cross back below. Let me zoom in a little bit. Cross back below the 50 here, and when that happens, the next target tends to be the 200. Now they tend to be fairly close at this point in time, so you can see the 200 is about 3,720. So I do think it is likely that we retest that, and then it's going to be very key. This 200 weekly moving average is very important for the stock market. If we get a weekly close below there, it greatly increases the chances of a new bearish trend, potentially even a repeat of 2008, that crash. That risk is still there, and that tends to only happen because you can see as I zoom out, okay, so we had here in March 2020, that was a crazy black swan event, and we did have a weekly close here, but it recovered pretty quickly. Now though, with the exception of that, there's basically no weekly closes below this 200. As you can see, the last time it did happen here was that 2008 crash. So we want to start getting very careful if we get a weekly close below the 200 week moving average, because that really just increases the chances of a much deeper, larger sell-off. So until then though, as long as we're above the 200, things are good. Ideally, we want to be above the 50 like we were very recently, but we're back below it. So this likely means we retest the 200. Hopefully it's just a retest, a bounce, and then a continuation higher. right? In a similar way that maybe you could say over here, it got back above it a little bit, it retested the 200, then it bounced and it continued higher. So this again confirms to me that it's likely that in the shorter term, maybe the next 1, 2, 3 weeks, we are looking at a bit more downside in the stock market and in crypto. And hopefully what is going to happen then is that this is just a shorter term correction and pullback for 1, 2, 3 weeks. Then we bounce and we continue the uptrend and we continue higher than where we've already been, meaning SPX higher than where it was at this 4,200 and Bitcoin higher than it was at the 25.2. That is for now what I'm looking for. And let's just have a quick look at the Dow Jones Industrial Average on the weekly chart. Same setup, 50 simple moving average in blue, 200 simple moving average in red. You can see this one spent some more time above the 50. It is technically still above the 50-week moving average. So if it were to bounce here, that would be nice. But based on just the dollar index and the other charts, how things are looking, I do expect also just maybe a retest here of the 200, which is back down to 30.6. And again, the same situation. As long as the 200-week moving average holds as support, the bulls are fine, because you can see it has retested it many times over the years. And as long as it holds over here, that is fine. So we might be looking at a similar situation as here in 2015, where it tested it the first time, got back above the 50, couldn't really hold it, retested it, and then it bounced and took off. So maybe something similar here, where we got that touch of the 200 back in September last year. We got back above the 50, maybe it can't hold. We retested. If that holds and bounces, then we could be looking at upside continuation, hopefully. But what we do have to be careful of, in the same way as with the SPX, we get weekly closes below this 200-week moving average, and it really opens up the possibility for a much larger, deeper correction or global sell-off in the stock markets. You can see this only happened here in March 2020. That was pretty deep, but again, that was a black swan and it quickly rebounded. The other time was here, you can see in 2008, it got below it, and then we got a pretty significant sell-off once it got below there. So that is pretty much a line in the sand. Just set some alerts there. Once those go off and we get a weekly close below the 200, I think it's time to start getting cautious and consider more downside possibility. For now, what I'm leaning towards is, like I said, we get maybe 1, 2, 3 weeks of a bit more correction, perhaps to the 200 weekly moving average here, and then hopefully a bounce and a continuation up and past these highs. And hopefully that happens in the stock markets and Bitcoin and crypto. As the DXY also, like I showed you, maybe it goes to 109 or 110, and then hopefully it kind of peaks and continues the downward trend on the dollar index, so that stocks and crypto can continue going higher. So if you enjoyed this update, please smash the like button, leave a comment down below with your thoughts. What do you think? What do you like to see more from me in these kinds of videos? What would you like to learn? I always read these comments personally. Subscribe to the channel if you haven't done so already. Have a great weekend, and I will see you in the next video.